There has never been a time in which money has flowed so easily, super low interest rates and helicopter money. But what is going on in the real economy? It looks like many people aren't seeing the benefits. And while some might say that they don't care as long as they benefit, this short-sightedness is not good simply because the more people sharing in a good economy, the better for all. A strong middle class is essential for consistent healthy growth. You came here for the truth, so let me unveil that for you. The financial system today has shown its true colors. It is truly uneven. I'm going to give you some statistics. I'm going to give you what is apparently the easiest trade ever. No, I'm not talking about 7 shares of Amazon, although that is the goal for many. This is important because it's going to show you what has been happening in the system and why that's the case. Then after that, we're going to talk about the system in general, financial system, as well as a couple things related to the economy. Let's go. The entire rally from March's lows happened outside of market hours. Cumulative front month SPX futures returns by time of day. Intraday hours are 9:30 a.m. to 4 p.m. New York time. The dark blue line there, that's the US trading hours. And the light blue, that's overnight. So since the beginning of 2020, right in here, we can see what has occurred. During these overnight hours, this has resulted in a maximum expansion, whereas you look at during the trading hours, this has not moved. Now, what does that tell you about what's happening? Just to give you a little further breakdown, just to explain it, cumulative return is up on this side, and we're looking at the dates from January 2016 up until today. Now, I'm just giving you this breakdown because it shows you as time has moved on, there have been variances, but it has gone really, really out of this world right now this year. And there are definitely reasons for it. I do believe that there's other things going on behind the scenes. The most obvious reason here is that a lot of the news related to new developments coming out is there going to be something that saves us today, and you get the whole trials that are taking place. That type of news generally comes in those after, or let's say, the overnight hours. Okay, that's when this activity takes place. During the day, you might get a lot of the bad news, actually. So during this process, you are seeing this happening at a rate we haven't seen before. This disparity is occurring right now in 2020. It's going wild. So those who are actually taking advantage of this are basically printing money. As you can see right here, it is very clear, it is very distinct. This is different than buying, let's say, your 7 shares of Amazon and simply holding it for a period of time and selling it. These individuals are taking advantage of what's happening in the market itself. Very different, but just look at how this has benefited those who have been playing this. This is a closer look. We are seeing the S&P 500 absolute performance since March lows. The green is the day session, red is the overnight. And it shows us the 7th of April, it looks like, from this point. And same idea. You're seeing the overnight session rocketing higher, and then taking a look at the day session where, it fluctuates here and there, but essentially throughout this period, we haven't got any returns. If those people were doing it in the opposite fashion. The traders who are playing this game right now are certainly benefiting. This paper actually breaks it down more specifically. I have a chart that's associated with it as well, but I want to really read what they wrote here in the abstract because it explains it. Market return around the clock, a puzzle. And this is, by the way, back in May, but it really tells us what's happening. We study how the excess market return depends on the time of the day using E-mini S&P 500 futures that are actively traded for almost 24 hours. Strikingly, 4 hours around the European open for the entire average market return. This period's returns are consistently positive in every year, have an extra high Sharpe ratio, and exceed transaction costs. Average returns are close to zero in the remaining 20 hours. That's what I showed you in this chart just a moment ago. How crazy is this? But that's the way it's been. And they're showing you this every year. High returns around European Open are consistent with European investors processing overnight information, thus resolving uncertainty. Indeed, uncertainty reflected by VIX futures prices increases overnight and plummets around European Open. These results shed light on how equity premium is formed at the micro level. It's interesting. I just wanted to bring it to you. I'm not necessarily recommending people do anything. I'm doing this as a way to describe how this financial system is working as we see it on the central bank level, which we'll talk about in a second, as well as the markets themselves. They are not mechanisms of somebody thinking, you know what, 5G technology and Internet of Things and trying to build roads and tunnels and cars and houses and buildings and investment as people traditionally see it, it has nothing to do with that anymore. The financial system is simply a game. It's simply a method for these computer algorithms to decide what's what at any given time. And some people are certainly profiting off of that. That's up to them. That's their decision. You have to make that decision for yourself. I don't tell you what to do. You shouldn't tell other people what to do. This is all up to you, but I need to provide the information on every single level, so do what you will. This is the chart that's associated with it. Just a little further down during the introduction, they explain it and, exactly what we've talked about. I don't want to, really beat a dead horse here, but you can see it for yourself, pause it, or check the links in the description. As a result of all the activities of the central banks, you could see what has happened with the world total stock market cap. It has exceeded $100 trillion. That was expected because of how much liquidity had entered the system. I talked about this before. It's unbelievable to me that nearly $40 trillion worth of money had found its way into the stock market in just a few months. Now, it was down significantly throughout this period, but just the way that money moves in and out shows you how much appetite there is for risk. And it's very clear why there is that appetite. This shows us the total G7 central banks combined balance sheets. And it's pretty clear, it's pretty obvious as you look. The linear trend is that gray dotted line or black dotted line. And take a look at what had happened here. 2020, they expanded at a rate we've never seen before. Of course, covered this before. I just wanted to show you why this is all happening. When you've got money flooding in, you're going to see these crazy imbalances and absurdities that are very present right now. Again, part of this ridiculous behavior that's been going on in the markets are to do with the negative yielding debt, negative interest rates in general, as the central banks have gone haywire in what they think they can get away with. This has created a boom in negative yielding debt. Right now, over $18 trillion worth. It's complete madness. It's a circus. The IPOs have certainly benefited from all of this insanity, and you can see the first day return on US stocks after IPO. We're not quite at the .com level for this particular indicator, but this is the only time frame where we've really had anything to compare to. It's gone further than that, as you can see, any previous time except for that .com bubble, but it looks like we're heading there very, very soon. This is just a comparison of what we are seeing with the money that's been pumped into the system, the M1 money stock, versus the blue line there, which is the US wages. And US wages are going up in a sense of nominal sense. 1960 until today, of course, you see that they have increased. That's very clear. And if you just see, though, how expensive things were at that point and how expensive they are today, you realize that your maybe, the food that you had to buy, your house that you had to buy, your car you had to buy, add up all those things, compare that to the wages people were making. Certainly, both of these aspects have increased. They've increased a lot, but the wages have certainly not kept up at all. It's just not happening whatsoever. And you could see that over time, more and more and more people are losing out. And that brings me to this one. Most small business owners in the United States believe that the worst of the situation is still ahead of them, with half saying that their operations would permanently close within a year unless the business environment improves. And we don't know what's going to happen over the next little while, that's for sure. Will there be enough revenue coming in for a lot of these businesses? It looks like no is probably the likely answer for so many places around. If the store is shut down, if the business is shut down, of course you're going to have trouble. Also, there's the acceleration of the e-commerce trend, which has really taken off. As you can see in the fourth quarter, that has been the case where they've become more comfortable with buying things online, and that will have a further impact on people because of the way that it has accelerated too rapidly, and that's going to hurt some businesses, that's for sure. At the same time, you've got the big box stores open where the small stores are forced to close, so that puts further pressure on them. So you might have a bunch of people that are doing okay, but those small businesses, unfortunately, they just can't survive. There's numbers in here, they give you ideas, but it's all based on polls. It's all based on, where the studies have been taken and so on. To me, it doesn't really matter. It just shows us that the same trends are continuing. They're persisting right now, and I'm just trying to update you on that. That's all for this video. If you found it informative, hit that thumbs up button. Thank you for being one of the 10% who will do that. If you want to learn about e-commerce, you want to get on that trend, but you don't want to pay anything, you're unsure and so on, then just take my course. It's free, the AmazonGPS.com. If you want to know about the financial system, you're interested in it, and you want to know what's actually happening, well, you can learn from these two books. Check them out at the link in the description. If you want the audiobook, that's available at themoneygps.com. But hold on a second. Have you seen this video yet? If not, you definitely want to do so. Check it out, and I'll see you there.